Hello and welcome to Crux Investor. We spoke earlier today to Peter Doyle, who's the MD and CEO of Montem Resources, ASX-listed coking coal developer with assets in Canada. And if you want our thoughts and opinions on that conversation and the company itself, you can find that at cruxinvestor.com/club. Where you can also find detailed company reports. You can find commentary from experts from around the world on a variety of commodities and companies. There are training videos on there, summaries of other interviews that we have done just to save you a little bit of time. And of course, there's a thriving community of investors sharing their thoughts and ideas with each other in a friendly environment. And you should go along there now and join them at cruxinvestor.com/club. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, take a look in the description below. Peter, how are you doing, sir?
I'm very well, thanks, Matt. How are you?
Not too bad. I've got an Aussie who's in Canada. What are you doing there?
Trying to start a coal mine and lift a coal mining company into the stratosphere.
Oh, good lad. Well, we're going to hear all about it in a second for sure. But seriously, what are you doing there? Is it just you've moved because of work? Or have you been there a while?
Yeah, we moved up to Canada 5 years ago. I first came here in 2012. And really, it started from a conversation in Hong Kong in 2006 that Canada really has an amazing set of coking coal reserves. And I've just always seen it as an opportunity and took that opportunity in 2014 and moved up here in 2015.
Oh, nice one. Okay. You and the family. Very good.
Yeah.
Okay. Well, why don't you kick off? Give us that 1 minute overview of the company and I'll pick it up from there.
Okay, excellent. Well, thanks very much for having me. Montem Resources, newly listed on the ASX. We're a coking coal company operating in Canada. We have a number of development assets in the heartbeat of coking coal production in Canada called the Crow's Nest Pass. We have one mine that we're bringing back into life. We should be producing from that in 2022. And we're going to take the profits from that mine and invest them in our large development assets that are adjacent to that mine.
Okay, well, let's get into the business plan in a second, but we've got to start at the basics here for people who hear the word coal and they go, oh, no, thank you very much. That's dirty, filthy coal. The future is battery metals for sure. You must get that a lot.
Yeah, we do. And look, I've been in the coal industry over 25 years. It's misunderstood, but quite simply, there are two types of coal, or there are two uses for coal. The first and the one that is the majority of coal around the world is used to produce energy, and that's in the form of mostly steam and then turned into electricity. That is called thermal coal or steaming coal. And we have none of that. And what we have is called coking coal or metallurgical coal. And now an easy to understand term, steel-making coal. So coking coal is quite rare. It makes up around about 10% of the global coal resources. It's a precious resource. It's highly sorted by it's a fundamental feedstock to modern steel making. You can't have the type of society that we have without steel. It is the backbone of all that we do. We use it in basically everything from infrastructure to the battery metals to the batteries that you talked about, to the cars that they're going to drive, in our schools, in our transport. And to make steel, you need to to make steel from the blast furnace, which accounts for around about 70% of new steel production. The other 30% is recycled steel. You need to take iron ore, put it in a blast furnace with coke that's made from coking coal, and out the bottom of that industrial process comes pig iron, and that then gets refined into steel.
Okay, thanks for breaking it down. It is quite confusing because we are all talking about green revolution and green circular economies and all that ESG type stuff, and people get confused between the two. In fact, I'm ashamed to say I used to do the structured finance for thermal coal deals in India. So there we go. That's my checkered past. But you touched upon the business plan there. So your new company, Montane Resources, a new company. So I don't really have too much to grill you on, but I am going to listen to your story because I'm intrigued by it. It's the first coal story we've had on this show, actually, as to what you're setting out to do and how you're doing it. You talked about a two-stage approach there. So I'm definitely intrigued. So tell us what you've got and tell us what you're starting with, and then I'll try and see if we can ask you some questions off the back of that.
Okay, yeah, excellent. Well, we have a huge asset base in, as I said before, the Crow's Nest Pass. The Crow's Nest Pass is in southern Alberta, Canada. It's right on the railway line that goes directly to the port for export of this coal. And we are adjacent to Teck Resources, which is the second largest company exporting coking coal company in the world, behind BHP, and Canada is the third largest exporter of seaborne coking coal, behind Australia and the US. So we've got a bunch of great assets sitting in exactly the right spot on infrastructure. We have really three classes of assets. The first one, and our sort of headline asset, I guess, is the Tent Mountain Mine. It's an existing mine with existing permits, which gives us a really big advantage over a greenfield exploration company. We have been working at Tent Mountain for the last 3 years. You say, yes, we're a new company. We're newly listed, but the company was formed in 2016 when we bought these assets. And this is all we do, is coking coal in Canada. The Tent Mountain Mine is planned to go into production in 2022. Right now, we're at the final stages. In fact, I signed a letter earlier this week that went to government to say that we plan to restart the mine. We've completed 2.5 years of environmental monitoring, engaging with the local community, and doing a definitive feasibility study on the mine to make sure that it actually makes money. And the results are compelling. Yeah, it's great. It's a mine that's halfway through its life. So it operated in the 70s and 80s. It had a 15-year contract with the Japanese that finished. And at the end of that, the mine was not able to survive in the spot market, which was much different trade to now, and at a much different price point. So yeah, it's a nice mine. It should get into production really fast, and on an average pricing, should produce around 60 million Aussie EBITDA per annum for 14 years.
Okay, well that doesn't sound big in the world of coal to me. So let me just talk to you about the ambition here, because you've got Mark Lochtenberg on the board as well. In fact, I know he's an NED, but he's ex-Glencore. That suggests a kind of size. Your track record to me suggests that you're used to working at a certain level. So talk to me about the plans for this, because stage one feels a bit small.
Yeah, well, it's small for a reason, and I'll explain that to you. And yeah, look, Mark is great. It's good to be back working with Mark. We've worked previously before. We used to, both work at Glencore. I was at a very different level to Mark back then, over 20 years ago. And then at Cockatoo Coal, he was the CEO and I was the COO. Mark's the chairman of this company. I approached him early on to become an NED, and then he became the chairman later. And he's invested heavily in the company as well, which I think is really great. Look, we have ambitions to produce 10 million tonnes from our assets, and we think the assets can do that. The Tent Mountain Mine is simply the platform or the springboard into that 10 million tonnes, because it has a permit. So it's a relatively modest amount of capital to get it started, and we can do it much, much faster than anybody else doing a greenfields development. You know, it takes around about a minimum of 5 years and pushing out to 7 now to start from a greenfields operation to do the exploration, the environmental work, the planning, and then get the approvals. Whereas we should be going around about the end of 2021, fourth quarter 2021, we should have our final green light from the government to restart the mine, a quick restart, and then use the profits from that to put it into the Chinook project. Chinook, we've just finished drilling our first season at Chinook. We released the results to the ASX about 2 weeks ago, and it's fantastic. The Chinook project sits on top of 3 old mines. Again, they used to export to China, to Japan, and these mines are they were old underground mines that operated in the 70s and 80s. We're exploring for open cut resources next to them. We have 150 million tonnes of JORC there right now, and we have an exploration target of up to another 450 million tonnes, which gives us great anticipation and excitement over what this project can be. We've done a concept study on the existing asset base. We've done some drilling. As I said, the results were released to market the other day. We found coal seams on average at 22 metres thick, which for hard coking coal is quite extraordinary. And yeah, we will work over the next 2 years to bring that up to a pre-feasibility level study, and then apply to the government to open that mine. And in five or so years, we expect to get approval for that and to put that into production as well. And that will take our production levels from around just over 1 million tonnes to upwards of around about 6 million tonnes is our expectation.
Okay, so before we start running, let's work out how the walking's going. Let's come back to Tent Mountain here. So how much cash have you got today? What more do you need to do? Are you saying that with regards to permitting and licenses, the Alberta government province has been quite helpful to you? They want to get this thing back and going? And what are the stumbling blocks in reality?
Sure, they're all good questions. So we listed in September and we raised $8 million. We've just put a bit of that to work in the latest drilling program. At the start of October, we had $7 million, and we expect to go into the new year with around about $4.5 million after that drilling program is all paid for. We raised enough money at the IPO to get us to the start of construction at Tent Mountain. We then need to, fund the actual mine build, and we have a number of strategies in play to do that. So the first is the fundamentals are about half the capital is for mobile fleet, and we expect to get a good leasing deal on fleet from Komatsu.
What's the number though? What are we looking for?
Yeah, so it's 168 million is the estimate from the feasibility study of US, and 70, I think it's 73 million of that is mobile fleet. So we expect to get that number as a lease. And then the remaining approximately 100 million US, we need to do two things to get that. Some is debt, and we are already talking with arrangers of debt and approaching that, but it's a little bit early. The plan for the company is to sell part of Tent Mountain to a joint venture partner. So we've been engaged.
Interesting. Okay. Why that route, given it's so small?
Well, I think it's a tried and true successful route. It's fundamentally the people that use the coal, the steel makers in North Asia, Japanese, Korean steel makers, want to secure supply. They want to see new entrants come into supply. There is forecast a very big supply gap for steel making coal over the next 2 decades. There just isn't the investment going into these projects, and these projects are getting harder to find. And so our expectation and our knowledge of doing this before is that Japanese steelmakers, Japanese trading houses, Korean steelmakers, Korean trading houses, and Indian and Chinese as well will invest in the project at the project level, providing comfort for equity investors that we've got a good partner, comfort for debt that we've got a good partner, but most importantly, the offtake. So you've got a trading house that's selling into JFE and selling into Nippon Steel and selling into POSCO and Hyundai, and really facilitating that you're getting good offtake of your coal and at a good price.
Okay, and that's also good news because it's quicker, I suspect. If you've got those relationships from Glencore days, it gets you in. You don't mind giving a little bit or leaving something on the table for them, because your main focus is this second project at Chinook. That's where you're really making the money.
Yeah, that's exactly right, Matt. I mean, look, Tent Mountain makes good money, even in today's market. And I'll talk a little bit about the market because it's an interesting time. But, Tent Mountain makes good money, and they will. Our belief is that joint venture partners will want to participate in that. But, of course, they'll be interested in this large upscale into the next project. And, you do business with your friends. So, if we're already in business on one mine, it's highly likely that we'll be in business on the second mine.
Okay, well, can we talk about your other friends, the shareholders at the moment, right? Which is just understanding the timing of Chinook. So you kind of laid out the timing on Tent Mountain, which is great. That's accelerated time frame. That's great. But Chinook, what are the things that are going to slow that down, or do you think it's a nice, easy run into that?
Well, look, developing coal projects in Western Domains is not a walk in the park, but it's also a laid out plan. The government, particularly the government in Alberta, really, Canada's an extractive based economy. It remains that. It has large and very, very attractive coal, met coal resources, and the government wants them developed. They have a large industry already. Right next door to us in British Columbia, and all those royalties go to the British Columbia government, and the Albertan government are attracted to replicate that industry just 20 kilometres away on the Albertan side of the border. In terms of stumbling blocks, really it's financing and getting the work done, Matt. We've done our first phase of exploration. We believe that our business plan of focusing on the more modest size investment to then fund the second investment will work. We have 2 more seasons of drilling to go, bring the project through pre-feasibility level, present that to the government, get the terms of reference for an EIA, do the EIA, and then apply for the mine. That process will take through to 2024, and then we expect to get approval in 2026 and production in 2027.
Okay,
that's our timeline.
Beautiful. Tell me this, because again, we're all learning here, because it's not an area that a lot of people investigate because they've made some assumptions. So, coking coal, is that all the same grade? Do you get premiums for one type of coking coal versus another?
Yeah, you do. The premium grade coking coal is the headline price, and then all other coal is benchmarked against that price and sold at a discount. Now, it sounds sort of dramatic, a discount, but the discounts are tiny, right? The headline price might be discounted 1% or $1 to the next brand of coal, and so on. The Tent Mountain coal we expect to sell at a 13% discount to headline prices, and we've had 3 different marketing groups look at that and give us their ranges. And the ranges are sensitive, right? We've got a business to run, but on average, it's 13%. We expect that the Chinook project in January will release the coal quality results. This coal used to be used by the Japanese steel mills. They've told us it was their best brand coming out of Canada back in the early 80s. So our expectations are high. We expect this coal to be sold at a very small discount to the headline price, within 2 or 3%.
Okay, because the DFS on Tent Mountain, you're talking about 17% post-tax IRRs. Is that normal? Is that a good number?
Oh, look, we're working. That's on a project basis, not an equity basis. If you do it on an equity basis, it kicks into 25% once you gear it. But we always present our projects on an equity basis. On a full project basis. That is, there's been no work yet done to I guess, high grade that feasibility level study. Yeah. That was done third party to present to a market to say this is the base case.
But it's exactly that. It's worth pointing that out to people, because they're looking anything sub 20, people get nervous about. But you've yet to optimize the capital component to it.
Yeah, absolutely. And look, it's also worth recognising that we believe this mine is fundamental to our business. We get started first. There's a huge amount if you look at the maps on our website or the videos, there's a huge amount of concentration of effort going in here, and first to market has to have an advantage over the rest. We get cash flow going of $60 million a year. We're not going back to shareholders to ask for more money. And we start looking around at what other attractive assets are that we could accumulate.
Okay, so let's just help people understand a space that perhaps don't really delve into. So there's going to be a few new producers coming into the market at the same time. I know I get that coking coal is only 10% of the marketplace, but what's the size of that market? What's the effect of these new producers coming on board roughly the same time as you know, and in relation to how the pricing has looked over the last 10 years and going forward?
Sure. So right now the price for an Australian cargo is $100 for the headline brand. And it's an interesting time, as I mentioned before, because the Canadian coal, the equivalent Canadian coal, is getting $140 right now today. If you came into the market and you wanted to buy 100,000 tons of hard coking coal from Queensland, it's $100 a ton, and 100,000 tons from Canada, it's $140 a ton.
Why?
Well, there's I don't want to get into the politics of it too much, but the Chinese. Look. I'm not a politician. I'm a coal miner. The Chinese and the Australian governments are having a little bit of a disagreement at the moment, and perhaps a trade war of their own. And right now, it appears that the Chinese are not allowed to buy Australian coking coal, but they are allowed to buy other coking coal, which they're doing. So, you know, what that sets up is the steelmakers in China are paying too much, you know, compared to their competitors for their feedstock, and their steel margins are going to go down, and they're going to put their hand up at some point and say, hey, this is hurting us.
Yeah, it's not going to last. So that's a temporary blip in the marketplace. So let's come back to that point of, you know, can you compete when there are lots of new competitors coming into this space? What's it going to do to price?
Yeah, look, so there's not a lot of new competitors coming into the space. The concentration of supply in hard coking coal around the world is dramatic. There are really only 4 or 5 big producers of hard coking coal. And so they keep supply constrained for very good, well, you know, they keep, maybe constraints the wrong term, but they keep it under control such that the market doesn't get oversupplied. And that discipline from the supply side has been, you know, a dominant factor over the last decade. The average for the last 10 years for hard coking coal is $180 a tonne. And we've had these great swings where we've seen it go over $300 multiple times. And if you're a little new company like ours, we are aiming to get assets set that make money at $100 a tonne US. We work on an average forecast price of $150 US. But if you then look at our metrics at $180 US, suddenly our IRR jumps from 17% to more like 22%. You gear it up and you're up over 30. So, you know, these things actually print money when times are good. They really do. And that's why we're attracted to hard coking coal and open cut mining, where you've got huge scale to ramp things up fast, much faster than underground mining, and really take advantage of those times in the market when things go high. And look, right now it's setting up perfectly for that. In the next 2 years, coal prices will go dramatically high. The supply is getting constrained, and there's nothing slowing down the demand side. The demand side is lifting, and in fact, driven by government spending on infrastructure, steel utilisation in China is the highest it's ever been. And around the globe, it's starting to tick up. You've got more cars being made in Japan right now than just about ever before. Steel consumption is very, very high, and that drives the feedstock price for that. So I'm not sure if we talked about that in terms of supply where we are. There are 2 other main groups right next door to us. One is Hancock Prospecting, one of Australia's largest mining companies, have come into Canada, and they paid $750 million or $745 million for a project next door to us. Now, to put that in context, our market cap is around about $40 million, and we've got more assets than what Hancock bought. They have one project that's proved up and is going through permitting right now called Grassy Mountain. It's a 4.5 million tonne mine, and we would argue that the Chinook project is quite similar in scale and size, albeit it's not proved up to the same level yet, and it's a few more years away. But that's kind of, you get that for free with us right now. Our market cap indicates that the Tent Mountain is got an NPV of around about 140 million, and our market cap of 40 million. It just doesn't add up for us. The value is to see us accrete quite rapidly up to the kind of levels of our nearest peer on the ASX, which is Atrum. Atrum are drilling out a project to the north of us called the Elan, or to the east and north of us called Elan. It's a wonderful coal deposit. I was at Atrum when we bought that, and I came across to Montum because I saw the advantage of our permit at Tent Mountain. The capital required to take a project from a greenfield through to full development is quite a lot, and it's why people or companies like Hancock are coming in at a later stage, because they can pick them up for what they think is a reasonable price, and put them into construction and production. For us, and for me personally as a professional in this industry, I saw the attraction of the permits at Tent Mountain as a great advantage to get into production fast. And then coming all the way back to your question about capacity, there's ample capacity on the railway line. There's ample capacity at the ports in Canada. They have great infrastructure supporting these industries. As I said right at the beginning, it's an extractive-based economy, and it remains so, and the infrastructure is really good.
Okay, so just to be clear, when I said there's new entrants, you said there wasn't. There are two new entrants, in spitting distance of your asset, with big balance sheets attached to them. And I get the point that you're arguing that compared to them, you present more value, more leverage to an investor coming in, given the scale of the assets. You are going to have to sort out a strategic partner to bring the capital in, to produce the cash, to do something with Chinook. So that's your game plan. You're being a bit more, I guess we say, agile about the way that you think about it.
Well, I'll take agile. I think for us, it's just the fundamentals of how this business runs, right? You go out and find something good, and then you get it. You attract partners with their balance sheet to help you lift it into production.
You sound like one of those companies that's trying to make money.
Look, we set out. You look at our board and our senior management. Bob Bell's been a stalwart of this company from the outset. Bob is very well respected in global coal markets. Used to be the chief commercial officer of Teck Coal Unit, so he looked after all of their coal sales and logistics for nearly 30 million tonnes of production. Bob knows what he's doing. He actually rang me and said, you should have a look at this. When I was at Atrum, I've given you their name and you should have a look at it. And it didn't take me long to see what he was talking about. We are set up to be a mining company. We're not set up to be, to find something and sell it on. If the opportunity comes, of course, we'll assess it. But we believe that we can produce up to 10 million tonnes of hard coking coal. And once you get to that level, Matthew, you're talking about a multi-billion-dollar company. So that's what we think our asset base can support. We step through together the process to get there. And I think we have, the fundamentals are there. We've got the management team to do it, and we've got the asset base to support it.
Yeah, it's interesting when we sort of do the analysis of coal companies in the market, so on across various exchanges, there's a lot of them sitting on a lot of cash. It's like they don't know what to do with the money.
Yeah, well, that's there's a few of them in Australia like that, and I think they wait for juniors like us to prove things up and then acquire them. As I said, we of course will assess any offers and opportunities that come our way, but we believe that we already have the fundamentals in place to make our shareholders very, very wealthy.
Okay, Peter. Well, like nice run through. We haven't spoken before, and it's new story to us, and it's in a space which, again, we didn't imagine that we'd be getting into. But yours attracted us. We like the look of what you do, especially the team. Track record is pretty impressive. Also, Mr. Flannery is on board, isn't he? You've got a rather sophisticated investor, which might be worth mentioning.
Yeah, we do. We've got a number of them actually. We've just due to the IPO, we attracted a couple more institutions. But before the IPO, when we were private, we had two real base picking up the base and saying, stay private, the market doesn't appreciate what you've got. And that is the Flannery family. Brian Flannery has been a strong supporter of me and the company from the outset. And they've accumulated quite a holding. Brian is well known in Australia. He was the managing director of Felix Resources, who sold to Yang Coal some time ago now, and I don't know the number off the top of my head, but it was a stunning number in the multiples of billions of dollars when he sold that coal company. And our largest shareholder is and our biggest supporter is Regal Funds Management. Regal have bought seed stock and then supported us to stay private and said, wait until you have things proved up and then take it to the public. And they supported us at the IPO and they continue to support us. I have very good rapport with the guys at Regal. They've been to site. They know what it is that they're invested in, and they're very, very pleased to be on our register, and we're very, very pleased to have them there.
Okay. Well, like I say, Peter, just wanted to hear the story. You know, it's early days, so I want to see what you do. I want to see if you do what you say and say what you do. Stay in touch. Let us know how you get on, okay? I'll be delighted to take that phone call.
Yeah, I'll look forward to telling you that we're doing what we say we've done and achieving what we're setting out to achieve. Thanks very much for your time, Matthew.